Hello and welcome to another Lincoln property blog, brought to you by Walters of Lincoln. In my articles on the Lincoln property market, I like to provide an insight into the real story of what is happening in our local and national property market and address the misconceptions that some of the media have been spreading. So this week I want to discuss how house prices have risen by 3.97% since Christmas. Rents in the Lincoln area have soared in the last 2 years, with the average Lincoln rent increasing to £798 a month, an increase of 16.3%. Because of these growing Lincoln rents, it has made home ownership more cost-effective for younger Lincoln buyers and more lucrative for Lincoln landlords. On the back of this, house prices are rising in Lincoln. But how can I say house prices are rising when the land registry and other indices from the banks state they are falling? The land registry figures published this month will be from sales completed, i.e. keys and monies handed over in February 2023. Yet, as everyone knows, it takes on average 19 weeks from agreeing on a sale to a completed sale in the UK. So those land registry house price figures are from house sales agreed upon in September or October 2022. If only there were a more up-to-date way of calculating what is happening to house prices. Well, there is. By measuring what houses sell for at the sale agreed date by their square footage. As I explained last week, the measure of price per square foot is not a particular terrific way to judge the value of an individual property. However, when looking at a national and regional level, its accuracy is excellent. 98% accurate on a national level, and around 95% accurate on a regional level. The average price per square foot at sale agreed matches the Land Registry and Nationwide House Price Index to a remarkably high tolerance accuracy level, albeit 7 or 8 months before the Land Registry and Nationwide Building Society publish their data. So, by tracking the regional price per square foot figures, it will give us an excellent idea of what is happening to Lincoln house prices now. The top of the property market was in July 2022, when the average price per square foot achieved for all house sales agreed in the East Midlands was £271 per square foot. By December 2022, this had dropped to £257 per square foot, a drop of 5.1% for the East Midlands homes sold subject to contract in December 22. By this April, the average price per square foot achieved for all house sales agreed in the East Midlands had risen by 3.97% to £268 per square foot. Let's put it another way. House prices in the East Midlands area, including Lincoln, are 3.97% higher than at Christmas. Just for interest, these are the price per square foot figures split down by property type. Detached East Midlands homes, £314 per square foot. Semi-detached East Midlands homes, £262 per square foot. Townhouses, terraced East Midlands homes, £232 per square foot. Apartments flats, East Midlands, £224 per square foot. Before I move on to what the future holds, as a good comparison, currently Lincoln houses are selling for an average of £214 per square foot. There are several issues which could upset the apple cart. One is the recent Bank of England base rate rise. The recent decision by the Bank of England to raise the base rate by 0.25% has only led to a negligible increase of 0.04% in the average rates for 2-year and 5-year mortgages. This rise in interest rates is primarily attributed to their forecast that inflation will not decrease as quickly as initially anticipated. Consequently, the underlying costs of lenders' fixed-rate deals, known as swap rates, have risen slightly, resulting in an adjustment of lenders' mortgage rates, but not that much. To provide some perspective, current average mortgage rates as of late May are like those observed at the beginning of April, with some rate fluctuations in those 7 weeks. I also have concerns about the cost of living persisting among many Lincoln households, which may continue to impact sentiment and activity in the property market. Additionally, the gradual impact of higher interest rates on those existing homeowners should not be underestimated. There are millions of homeowners whose existing sub-1 to 1.5% interest fixed mortgages are set to end in the coming 3 years. Some of those Lincoln homeowners would rather sell up and trade down market to reduce their mortgage outgoings than cut their household budgets regarding entertainment, holidays, etc. However, as I have explained before in my Lincoln property blog. My message to those homeowners is to speak with a qualified mortgage arranger. You will be amazed how extending the term of your mortgage will reduce your monthly payments, enabling you to stay in your existing Lincoln home. Of course, you must weigh the pros and cons by talking to a qualified mortgage professional. Yet if lots of Lincoln homes get put on the market in the coming year or so, i.e. what happened in 2008, then we will have too much supply and not enough demand, meaning Lincoln house prices will drop again. The consistent rise in Lincoln house prices over the past few years can be primarily attributed to a shortage of supply of properties to buy. The opposite will be the case if we get an excess supply of many homes on the market. So that is what could go wrong in the Lincoln property market. What about the potential good news? Contrary to expectations back in late 2022, I stated a few weeks ago, Lincoln first-time buyers in 2023 have been more active in the housing market despite prevailing uncertainty. I attribute this trend to the rising rental costs, which have made homeownership in Lincoln comparatively more cost-effective. This, in turn, has attracted new Lincoln landlords into the market to invest. I am aware some highly geared landlords, those who have high percentage mortgages on their buy-to-let properties, have been battered with the Section 24 taxation changes from a few years ago. Yet there are lots of new landlords coming into the buy-to-let market. They had their fingers burned on crypto and the stock market, and are now looking for another investment vehicle for their savings. The simple fact is the UK doesn't build enough homes to satisfy the demand, meaning in the medium to long term, rents and house prices go up. The British housing market, which experienced a surge during the pandemic due to the demand for more space, has yet to experience the anticipated decline that some commentators predicted last year. The resilience of the UK economy, the strength of the labour market, and the expected decrease in inflation throughout the remainder of the year are all factors that only add strength to the Lincoln property market. Tell me about your thoughts on the matter. I would love to know them.